Puma's stock suffered a dramatic collapse, sending shockwaves through the financial world and leaving investors stunned. In a matter of hours, the company's market value plummeted, wiping out billions and erasing months of hard-earned gains. The suddenness of the drop caught even seasoned traders off guard, as the ticker flashed red and the numbers tumbled lower and lower. The sell-off was relentless, with panic spreading across trading floors and digital platforms alike. For many, it was a stark reminder of how quickly fortunes can change in the volatile world of global markets. As Puma's value evaporated, questions began swirling about what triggered such a dramatic reversal. The drop sent shockwaves through investors and analysts, raising urgent questions about the company's strategy and leadership. Was it a misstep in product launches, a failure to keep up with competitors, or deeper structural issues within the company? The uncertainty only fueled more anxiety, as experts debated the root causes and speculated about what might come next. For a brand built on speed and performance, this financial stumble was a jarring contrast to its image. Puma, known for its bold designs and athletic prowess, suddenly found itself on the defensive, struggling to reassure both customers and shareholders that it could recover from this blow. The crash isn't just a blip, it's a warning sign of deeper issues threatening Puma's hard-won momentum. Empty stores and cautious consumers hint at challenges beyond the trading floor, suggesting that the brand's appeal may be waning in a fiercely competitive market. Management now faces intense pressure to restore confidence and chart a new course. Behind closed doors, executives are scrambling to analyze what went wrong and to develop a strategy that can win back trust. Every decision, from marketing to product development, is under the microscope. Every move will be scrutinized as Puma stands at a crossroads that could define its future. The company must decide whether to double down on its core strengths or reinvent itself to stay relevant in a rapidly changing industry. The world is watching to see if this iconic cat can land on its feet, or if this fall marks the start of a longer decline. Puma's next steps will not only shape its own destiny, but could also send ripples throughout the entire sportswear industry.
The numbers are brutal. Puma's stock plunged 16% in a single day after a disastrous Q2 earnings report. This wasn't an isolated event. It followed a year where the stock had already lost over half its value. The company reported a surprise net loss, missed revenue targets, and issued a severe profit warning for the rest of the year. Earlier in the year, Puma's stock had its worst day ever, dropping 23% after another poor report. Over 12 months, the stock is down 53%, erasing years of gains. Puma is in a serious crisis, facing a steep uphill battle to regain trust.
Puma's recent crash wasn't the result of a single misstep. It was the outcome of a perfect storm of challenges converging all at once. The company, once a symbol of athletic innovation and youthful energy, suddenly found itself facing a series of setbacks that exposed deeper vulnerabilities within its business model. Sales have slowed dramatically, especially in key markets like Europe and North America, where Puma has traditionally been strong. This slowdown signals a weakening connection with consumers, who are increasingly turning to other brands for both style and performance. Foot traffic in stores has dropped, and online sales haven't been able to make up the difference, leaving shelves stocked and stores eerily quiet. At the same time, costs have been rising across the board. From the price of raw materials like rubber and cotton, to the soaring expenses of global shipping and logistics, every part of Puma's supply chain has become more expensive. The company has also poured huge sums into marketing campaigns in an attempt to regain its edge, but these investments haven't delivered the expected returns. As a result, profitability has been crushed and margins are thinner than ever. Meanwhile, the competition isn't standing still. Adidas, a longtime rival, is thriving thanks to bold product launches and a strong brand identity. Newcomers like On Running and Hoka are also capturing the attention of younger, trend-conscious consumers with innovative designs and fresh marketing. Puma is losing ground on both fronts, struggling to keep pace with established giants and agile disruptors alike. On top of these internal challenges, macroeconomic headwinds have only made things worse. Global inflation is driving up the cost of everything from manufacturing to marketing, while higher interest rates are making it more expensive for companies to borrow and invest. The strong US dollar has also hurt Puma's international sales, as its products become more expensive in key overseas markets. Puma faces a unique financial squeeze. It pays many of its suppliers in US dollars, but earns much of its revenue in weaker foreign currencies. This currency mismatch has squeezed margins even further, eroding profits and making it harder for the company to invest in growth or innovation. The result? Shrinking sales, soaring costs, and a net loss that has shocked investors and analysts alike. PUMA's stock price has tumbled, and confidence in the company's future has been shaken. In a fiercely competitive market, every misstep is costly. PUMA's recent stumbles have allowed competitors to pull ahead, making it even harder for the brand to regain lost ground. The sportswear industry is unforgiving, and consumers have more choices than ever before. The brand is now caught in a vicious cycle of negative pressures. Declining sales lead to cost-cutting, which can hurt innovation and marketing, making it even harder to win back customers. Each setback triggers another, creating a domino effect that's difficult to escape. It's a tough environment, and PUMA is struggling to keep up. The road ahead will require bold decisions, fresh ideas, and a renewed connection with consumers if the brand hopes to turn things around.
PUMA's troubles are concentrated in the US and China. Once growth engines, now liabilities. In North America, sales dropped over 11%. In China, they plummeted nearly 18%. Economic slowdowns and rising competition from domestic brands have hurt PUMA's appeal. Supply chain disruptions have led to inventory headaches, forcing steep discounts and damaging the brand's image. Efforts to move up market, like the Speedcat relaunch, have underperformed. PUMA's strategy isn't resonating with trend-driven consumers in these key regions. The company is stuck between premium and mainstream, missing the mark on both. Operational missteps and failed launches have left PUMA in an awkward middle ground. The result? A massive hole in global revenue and a brand struggling to find its footing.
The sportswear industry is a battleground where brands fight fiercely for every inch of market share, and PUMA has long played the role of the underdog against the titans, Nike and Adidas. These two giants have set the pace, dictating trends and dominating conversations, while PUMA has often struggled to keep up with their relentless innovation and marketing muscle. Adidas, for example, is currently enjoying a renaissance, with sales soaring thanks to the massive popularity of retro classics like the Samba and Gazelle. These shoes have become cultural icons, embraced by everyone from fashion influencers to everyday consumers, and have helped Adidas capture the spirit of nostalgia while staying relevant in today's fast-moving market. PUMA tried to jump on the retro bandwagon with its Speedcat line, hoping to spark a similar revival, but the response was lukewarm at best. The Speedcat failed to ignite the same excitement, and PUMA's attempt to recapture past glory didn't resonate with the new generation of sneakerheads or casual buyers. Meanwhile, Nike continues to tower over the competition. Even though it's faced some slowdowns in certain markets, Nike's sheer scale, global reach, and fiercely loyal fan base keep it at the top. The brand's ability to create hype around every new release and its deep connections with athletes and pop culture give it an edge that's hard to match. But PUMA's struggles go beyond just tough competition. The company is grappling with its own internal challenges, whether it's product design, marketing missteps, or simply failing to capture the imagination of today's consumers. PUMA is falling behind in ways that can't be blamed solely on the market. Adding to the pressure, new players like On Running and Hoka are shaking up the industry. These brands are winning over customers with fresh designs, innovative technology, and a buzz that's hard to ignore. They're not just taking a slice of the pie, they're changing what consumers expect from their sneakers. So now, PUMA finds itself squeezed from both sides, giants like Nike and Adidas above, and hungry disruptors like On Running and Hoka below. The competition is relentless, and the margin for error is razor thin. In this high-stakes game, brand heat is everything. The energy, excitement, and desirability that drive sales are fading for PUMA, and that's a dangerous place to be in an industry built on hype. Every misstep PUMA makes is magnified as competitors surge ahead, capturing headlines and consumer attention. The gap is widening, and catching up gets harder with every passing season. For PUMA, clawing back lost ground won't be easy. It will take bold moves, fresh ideas, and a renewed sense of purpose to turn things around in a race that's only getting faster.
PUMA has a history of comebacks, reinventing itself in the 90s and again under former CEO Bjorn Gulden. But today's market is faster, more global, and far more competitive. The new CEO, a former Adidas executive, faces the daunting task of fixing deep-seated issues in product, marketing, and regional strategy. PUMA is launching a major cost-cutting program and betting big on a global brand campaign. It's a high-risk, high-reward approach. If the campaign reignites demand, recovery is possible. If not, the financial strain could worsen. The company's future hinges on bold leadership and flawless execution. The stakes couldn't be higher.
Analysts are skeptical. Many have downgraded PUMA, questioning what makes the brand stand out. There's concern that cost-cutting could distract from the urgent need to drive sales. PUMA's stock trades at a steep discount to Nike and Adidas, but the low price reflects deep investor pessimism. Growth forecasts are modest, lagging behind the broader market. The only bright spot, a higher dividend yield than its rivals. But that's little comfort amid such volatility. For most, PUMA looks like a risky bet with limited upside. The expert consensus proceed with extreme caution.
So what should investors do? For contrarians, PUMA's low valuation could be a rare buying opportunity if a turnaround succeeds. But the obstacles are huge, weak demand in key markets, fierce competition, and the need for flawless execution. Risk-averse investors may prefer the stability of Nike or the momentum of Adidas, both safer bets. Fast-growing disruptors like On Running and Hoka offer another path, tapping into the latest trends. A diversified approach, mixing leaders and disruptors, may be the smartest move. For now, PUMA's uncertainty is hard to ignore. The stock is cheap for a reason. Most investors will likely look elsewhere for growth.
PUMA stands at a precarious crossroads, battered by falling sales, shrinking margins, and fierce competition. The bull case is built on hope, a new CEO, a bold campaign, and a history of comebacks. The bear case is grounded in harsh reality, persistent struggles, failed strategies, and deep skepticism. For most, PUMA is a high-risk speculative bet, not for the faint of heart. The potential for a rebound exists, but so does the risk of prolonged stagnation. Investors must go in with eyes wide open, betting on unproven leadership to reverse the trend. Safer opportunities likely lie elsewhere in the sportswear market. Whether PUMA can land on its feet remains an open question.